Hello everybody and welcome back to another video. In today's video we discuss everything to do with the stock, crypto and commodities markets right now, and things are starting to get pretty insane out there. In today's video we'll try to uncover some of the key levels that you need to be looking at right now, and of course we'll be discussing this current super boom in commodities. There's really only one way this ends, and it's not going to be good. Stay tuned as we talk about it. See you soon. All right, everyone. Well, this is our market recap for the markets closed the 3rd of March 2022. And we'll be going through everything, as we said, to do with stock, cryptos, and commodities. If you're interested in anything there, please remember to subscribe and smash that like button. So we'll start with a breaking news story, and this is going to be evolving even after this video. But basically, there is a potential here that, of course, a plant is on fire. Now, it looks like that has become, I guess, a little bit less of an issue. But of course, these are the types of things that can come out of left field during times such as this invasion. And we need to be very well aware of the risks when we're placing positions. Now, when we talk about the actual market in terms of the close, it was still a movement down here across the growth stocks. We saw semiconductors fall off, AMD in particular. Funny how Kramer comes out a few days ago. He says AMD's a screamer, and then it goes bad. The inverse Kramer is doing very well at the moment, I've heard. Tesla 4.61% down, one of the shorts that we're liking predominantly at the moment. And of course, NVDA is another one that I've been kind of vocal talking about here. Let's now take a look though at the indices. What was occurring for the session? Well, it was a sell-off, followed by a rally, followed by a sell-off. And there was actually a bit of a sneaky thing that occurred here through the open, which we'll be taking a look at in the charts. Certainly could have gotten quite a few traders in terms of false breakouts. We'll be having a look throughout the video of how you can avoid some of these things by using multi-time frame analysis. And I think it really will help quite a lot of you. So the trade that's been consistent now for a week or 2 weeks has really been XME. That is the minerals and mining. Of course, this is doing incredibly well, 3.23%, starting to become pretty parabolic in some ways. One thing about these particular commodities is that when they go, they tend to go hard and they can go for longer than you expect. So shorting these is a very difficult thing, and we'll talk about that soon. XLU, utilities have picked up, same with staples, same with gold, same with REITs. What this is showing is the market is bunkering down a little bit ahead of the non-farm payrolls results. So let's talk about some of the big bits of information that we've got out here. Well, of course, this is a bit of inflection point information, just talking about the PE ratios over time and when they were expensive and when they were cheaper and what ended up happening. And it's interesting where we are right now in terms of an inflection point. But I really want to discuss this one, which is smart money versus dumb money. It's an interesting chart, and what it shows, I think predominantly, is that smart money likes to come into markets around that kind of negative 15% down, and they tend to look to buy at those things. Of course, they're buying the dip with the longer term basket kind of concept. But we'll notice here that smart money is overtaking dumb money. So dumb money is quite fearful, supposedly, and smart money is at least thinking about or purchasing. And they've been correct a lot of the time, but you'll notice even over here, when it comes to 2020, they didn't get it exactly right. They just like to pick up. And even over here, they pick up the initial dips. So it doesn't tell us that much, but it does say that they currently, or at least the commitment of the smart money, is a little bit more than maybe us being the retail traders. As we know, the reason why average, excluding recessions, negative 15.4%, we hit that the other day. We hit 20% on the NASDAQ, and we've fallen in the futures here. But look, every time can be different, and there are so many different bits of news being thrown at us. So we like to simplify things on this channel, and I'll show you some of the ways that we can, kind of cut through it if possible. S&P 500 correction since 1965, they've tended to be around that negative 15% if you are feeling bullish. Where do things get scary? Well, today we're seeing something happen that, I call the canary, and the canary is always going to be negative inversion. So basically where we see the 2-year and the 10-year invert, and that has usually been a very good signal that yes, in the next 12 to 18 months, the markets are going to have a big problem. Now we can't predict the exact day, but it certainly gives you an idea that things are very, very unwell. We're sitting here now with it rising again for another month, and you'll notice here on the daily, it started to rise again fairly steeply. So continue to watch that. We will be here on the channel. If you're looking at buying the dip, one of the things that you can sometimes do is understand that when markets hit key supports, which you can find on the S&P 500 and NASDAQ, we'll take a look at those soon. What we can also do as traders and investors is understand how many companies are underneath maybe the 50 moving average, showing us whether it's a market that's really fearful or not. Whenever this has really hit something like that under 10%, you'll notice that it's picked up quite a lot of really good support buying. Over here, it got it within a few days. I think it sold off a little bit after this, the 24th, and then it went up the 24th of December, that was. So it can be good to pick some of the dip levels that you might be interested in. And of course, if it gets under 10%, it really shows you probably an elevated level of fear that's overextending to the downside. Speaking of fear, the VIX. It was down on the session 0.78, but because of what's happened here with Russia and Ukraine, obviously the things that are going on there, probably would expect the VIX to come out a little bit more aggressive. We do also have non-farm payrolls coming out 1 hour before the market happens as well. So people are placing positions on the VIX, and depending on what the market chooses to do, this could be a very aggressive trade. I mean, at the stage, you would think the trend is currently up on the VIX, so therefore fear is coming in, and you would think it's probably going to rise. But look, it's a very, very, very scary trade. They call it the Widowmaker probably for a very good reason. PCC, put call ratio, continues to drop, which actually is showing us that a lot of people are placing bullish call positions on the market. That can be kind of positive if you're thinking bearish. If it gets, the lower this gets, the more likely it is that if you're seeing signals towards the short that you're going to be correct. Use it a bit as a counter-intuitive kind of thing. If everybody is bearish, then maybe you should be bullish. If everybody is bullish, then maybe you should be bearish. That's how I like to use PCC along with the technical analysis. If we're looking at gold, so here's one. A lot of people think of gold as a hedge against so many things. It's not really that way. I mean, if you truly understand gold, you'd know that gold actually moves more in line with certain other indicators. But in this case, look, it's hit resistance, and we can tell that it's shorted off there because the current information coming out doesn't look as bad as everybody thought, and that's moving back down. We did like this level here, this 1922, and that was a good little buy zone. If it gets past this resistance, being the 1950 level, then you probably expect gold to start to explode to the upside. But it'll really be more of a price action based trade. So be careful here in gold and be careful in a lot of these commodities. Let's take a look at a few of them now. We'll go over to oil. So oil has been blistering up here 1 week. Be warned, your petrol pump will be going up. If you're here in Australia where I am, usually it's about 1 to 2 weeks worth of inventory, I think. So in a few weeks time, we're going to really see the full impact of these high oil prices. A lot of people have been messaging me saying, oh, oil hasn't gone up that much, etc., etc., etc. Oh, you wait, it will go up, unfortunately. So 110 to 115, that's where it's been sitting. This is in what we call an excess phase. So effectively, it's gone parabolic. It is not really the time to necessarily be trading it if you like risk management, okay? And that's what I always say here. If you're prepared to live a bit of adrenaline junkie lifestyle, then it's a good time maybe, but it's very difficult to trade these types of times. It's more news driven, so just be careful out there. And some people are going to be saying, is this a head and shoulders? And some people are going to be saying, was that the end of it? I've seen people on television literally calling $180 a barrel. So for me, it's a very difficult trade right now. If you're on it, often you're looking for certain signs because all things usually end a certain way. And this again goes with commodities. Look at wheat here, 1,133. That's up from 800 only, a week and a half ago. It's a massive move. It's clearly in some kind of excess parabolic shape wave. And I'll give you a bit of a tip here. With these parabolic trades, usually what happens is they'll dump some monstrous amount in one day. Then they'll dead cat bounce. They will usually not make it back to the peak, and they'll turn around here. Now, if you're aware of how this looks, and you can go back and think about some of the parabolic things that you've seen in the past, if you start to do study into this parabolic movement, you can then follow the excess and then, of course, get out near the top. Now, you'll have to experience that day of pain, but of course, you can get out near the top. This is not a trade for the leveraged person. So if someone's in this leverage, it's going to be very difficult to do that. Be careful here. It can change like this. One bit of news can flick the switch. I just want to warn people against that. Let's move over to Tesla. So coming into non-farm payrolls, we've got the hanging man candle. That is a candle that's gone bullish. and then of course ended up going nowhere. So it's not exactly the biggest signal, but certainly one that has now been gone against bearish. And I think this pushes or puts a lot of pressure on Tesla towards that 800 target. Now, we're down about 1% at the time of this recording in the NASDAQ. If we were to open up down 1%, non-farms went a little bit further, there's a chance we could really be ending Friday with an $800 handle on Tesla. So just be careful there. Let's go down to the 2 hour, understand some of the price action. It broke through this current support. That was pretty much a good signal towards the short. Obviously, you've seen a little bit of bullish action here, but constantly just holding it down. And this was some weakness coming in from Wall Street. So $800 becomes the big support level. It's kind of at it near the close. It's expected to probably open somewhere around here now. And this is where buyers will be patiently waiting for the signs maybe to get back in. You can play it two ways as usual, but I think the price action is going to tell us a lot about what we should be doing next. Be fast, be nimble. The same thing with NVIDIA. We don't really like this stock at the moment, not because we don't like it fundamentally. We think it's pretty good. The only problem is it's a little bit overpriced, and semiconductors can come under some fire there. We also know that it's heavily retail traded, and therefore there's a lot of big players trying to short against this. They may get squeezed out, but around this zone is very important. You can see it's been consolidating for quite a few days, and I think a break underneath this level here around 231 could signify some further weakness. If you're feeling bullish on it, you've clearly got your resistance break as well. So great resistance break sitting around 245, great support break sitting around 231. Support would push down to 210, resistance could possibly even push up to 260 plus. So there's a good little trade here in both of these if you are willing to be patient and of course waiting through and bring your own systems into it. Unfortunately, ARK and Cathie Wood have not been winners here, guys. This is pretty bad. I mean, look, ARK continues to get hit here across the board. It's back down again. We saw that small bounce around 65, which certainly worked out for the session. It's come back up and it just continuously follows our trend line down. And of course, we're looking for the trend line to be broken to the upside and for the 20 moving average. Let's say you're feeling bullish about this. If it did something like that, oh yeah, things totally change at that point. But for now, it's still very bearish. We'll keep covering it. One of the ones we have liked, and this comes from the private Discord community we have, by the way, click the links down below, get into the public Discord community, join in on the trading discussion, and there's some great people in there that are sharing a lot of information. I'd really like to give a shout out to all of them. But one of the ones that we've been talking about is cybersecurity. You'll know if you've been following us for a while, I've been a big bull on cybersecurity now for the last couple of years. And the reason why is I think it's kind of the future of a lot of things, not only the future of obviously hacking and being able to protect yourself in the cloud, but it's also the future of potentially, you know, some of these conflicts and some of the things that go on there. Now, I'm not saying these companies are necessarily at the leading edge of that, but it can be, a thesis or part of the thesis for it. So we have a lot of resistances, we have a lot of supports, we have a lot of resistances, and if it comes back down, what have we got? We've also got two moving averages, the 20 and the 50. That is the blue line and the red line here. And if it comes back down to that level, what do we expect? Well, we've got a double bottom, we've got a break of a trend line, and we have a very nice $30 psychological zone. So keep a lookout for that if you're feeling good about these sectors. And I think sectors are where it's at right now. In the pick of the market, it's not just about any one particular chart. It's really about understanding that there are certain things that are doing really well and certain things that are doing a little bit more poorly. Let's talk about the indices. This is giving us a bit of a lie of the land. The DAX, firstly, big closure under a key zone. It's actually closed under the 2020 peaks. So that is before this whole pandemic thing began, it closed underneath there on the daily. The weekly is yet to close, which is a very important one, but this is very bearish. We've talked about the Wyckoff up here. We obviously really didn't like it at this zone here, and that turned out to be quite correct, and it continues to weaken. This is showing us that all of Europe is really getting hit more than the US in the markets. I mean, if you're feeling short at the moment and you've been shorting the European market versus, of course, the US market, you would have actually done a lot better. And that's when you're picking your asset class. But at this stage, underneath, a rally here could be met by selling pressure as well that could be formed around that 13,800 to 14,000. I'd be watching that zone very, very, very carefully. And I think that might be a good signal as well to show that maybe the worst is over if it gets through there. Another one that we've been watching incredibly closely has been the Dow, because it's presenting similarly to what we saw on the DAX. Basically a Wyckoff max paying kind of double top rollover. It hasn't closed underneath this zone, which is 33,200. We're currently trading at 33,600. If the non-farm payrolls doesn't end up, making the market happy and it gets underneath here, it's really another sign of negativity in the market. Now, if you're feeling positive, I think a big sign is here. We've got a big bullish hammer. You've got the Dow, often seen as one of the better indices that people look at, and it's 34,400. A close or a movement above here is signifying that the market believes the worst is over and we're probably going to begin rallying. And that's going to come through all of the major indices. That will also couple up with IWM, which currently is, of course, showing still signs of weakness. That's the Russell 2000, for anyone who doesn't know. The small cap companies, kind of the lifeblood of the new age of businesses in the US. And if that gets through 210, then it'll be putting in a double bottom, another bullish sign. This is where bigger traders and bigger investors, they really look for their signals. They might dollar cost average and buy dips and things like that, but they start ramping trades when it gets through these levels. So IWM is just another indicator we're using. You'll notice here, using the US 100, this is what I want to talk about with the sneakiness that went on with Wall Street. So I like the 2-hour chart, and of course I love the daily chart very much, and the weekly chart, etc. But notice if you were trading or watching the 2-hour chart, when it breached through on the last sessions and it went up, what ended up occurring was it came down very quickly. It hit 14.4 and then sold off. It never closed above on these timeframes. If you're trying to eliminate your problems with getting false breakouts to either side, using higher time frame analysis can be good. And what you could do instead is you could scale in. So let's say you took 1/3 position because you were trading a 15-minute chart to the bull side. And then you were waiting for something like a 2-hour to close above, and then you would add 2/3 of your position on and continue to let it through. By doing that, you've really allowed the market to enable you to see that it really means to break through. Conversely, you might be trading a 2-hour chart, put 1/3 on if it breaks on the 2-hour, 2/3 on if it breaks on the daily. It's a good little rule of thumb that I guess we can bring in here to these videos. In terms of the US 100, 14,000, testing from the bottom up is probably going to be a bit of a problem for it. You would expect some selling pressure around here. The downward pressure here was caused by, of course, that nuclear, I guess you would say, incident that's going on still currently. And then if it rallies up to this point, this could be where the market's sitting at ahead of non-farm payrolls. So just be warned. At the moment, it's very, very volatile. On the NDQ, where it actually closed at 14,035. So it's closing at a key level of support before the non-farm payrolls. You'll see here, support, 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 support. Breach underneath, it's a big deal. So it is underneath at the moment in the fake market futures, but it isn't underneath in the real market. So if that gets underneath in the real market, what happens? I believe algos will start to drive this market down. And it's going to be one of those things where 13.8 will be the next level. Underneath 13.8, could we be going back down to the lows? That will be something that we'll keep following here. I mean, effectively, this is a pickup. And at the moment, trend line down, a little bit of a double top. So breach through that intervening trough here. And we've got some, potential fireworks for the next week. VIX would go up and everything would turn out. Non-farm payrolls is really probably going to push that one. We also need to be watching the S&P 500. This one has a different level, more around that 42.85, 43 zone. It did sell off, closed on support. We do have peaks here. And if it gets through this level here, and of course it is currently underneath there, time of this recording, but if it does go in the real market underneath, then we move towards this level. There could be some buying here. Something we need to watch on the NASDAQ as well. But if we breach through here, you have to think the market's going lower again. So there are some key levels there for buyers. Really, you're just looking for a new breach above this high. And just like on the NAS, you're looking for it to actually get through that previous zone. It's hard to trade this market. There's no doubt. There's obviously large, fast moves. It's news related. you're looking for those big crack levels. Once you start to see structure in the markets, it gives you a lot more clarity about what the next big move could be. Let's have a look at Bitcoin versus US dollar. That's getting hit pretty hard here. It's coming back down to the support. So that support's around 40,500. You expect probably around here some buyers to try to come back into the market. We've been warning against the 44 for a little bit here. It's a huge resistance. And if you're feeling bullish, is this the zone for you? Well, it certainly could be. I mean, we've got previous really nice resistance there. We've obviously got some good level of support previously as well. So around this zone is where you expect Bitcoin to potentially start to show the turnaround signs, lightning bolt, etc. But if it gets through here, bad sign. Back down we go. And I think it's going to be driven more by the actual markets themselves. Still look towards the NASDAQ. That initial news of every person in Russia going into Bitcoin and into cryptos is starting to fade. And now we're starting to couple back up with the NASDAQ, at least how I see it. When you're talking about news, non-farm payrolls, 8:30 a.m. New York time. This is the jobs number for the month. It's going to be a big bit of information. Remember, non-farm payrolls can go off in one direction. So it can go up, let's say, in one direction, and then 5 minutes later, it can completely reverse. It's not a simple bit of information for the markets to digest. They usually take a few minutes to figure out what is going on with it, and it can go one way and then another way. If anyone's been trading on farms, let us know in the comments down below if that's often what you've seen in the past. I know for a fact that I've seen it many times go off in one direction and then completely reverse. If you haven't already, watch us and follow us on FX Evolution on Twitter. Definitely join the link in the description or just come over to Twitter. And if you've enjoyed today's video, please remember to subscribe, smash that like button, and we'll see you in the next one. Bye for now.